Clemens writes in from Germany, I noticed that some of Hugh's funds have a high exposure to various tobacco stocks. Could you talk about that and what you see in them?
Yeah, absolutely. Again, we're talking about an uncertain economic environment. One of the things we have greater certainty is that people smoke, they're addicted to it. We know, of course, in Western societies people are giving up, but we can model that, we can understand it. Of course, in emerging markets, it's a slightly different path. Philip Morris, the Altria group in the US, there is a stock then that has not a great deal of cyclicality. It's priced in dollars. I like dollars, and I get a 9% dividend yield. Kind of interesting. And they tell me that equities are a real asset, that they can raise prices. So that's a 9% on an index linked. So it's kind of attractive. The curious one, Jeff, really is I can also get 9% if I buy the senior debt. And I can't work out in my mind which is better. I'm tempted actually by the senior debt because I'm so bearish. Because in the event of a bankruptcy, remember, I get my money back as the senior debt holder. So 9, kind of interesting. I'm thinking about possibly putting a package of those very low cyclical businesses with almost government regulated revenue basis with these 9 or 10% dividend yields, and then blending it with like a portfolio of 2-year US Treasury stocks, whereby if we did have something which would lead to bankruptcy, again, 2-year yields would be on the floor. So just current thinking.
Hugh, do you like anything in the oil space, from the stocks to the commodity?
No.
Because of the deflation argument?
Because of the deflation argument. I spoke at a global macro conference on Friday in Santa Monica, and there are no clients. This is, you've got to give your best idea to a group of your peer group, and global macro guys, Jesus, they're kind of bright and they're fearful. When I had to speak for 45 minutes, one of the takeaways is everyone is long risk again. There were so many long commodity trades. Again, to repeat myself from earlier, I'm fearful of the surplus countries, not necessarily the US, the deficit. I'm fearful of the surplus countries like China and Germany, because there's the old saying, in God we trust. Well, we kind of got it the other way around. It was in Bernie we trust. If you think, if Bernie Madoff was doing the US accounts, then he would have overstated the accounts. I think GDP has been overstated.
Let us look at BP versus the crude oil price. Quite an interesting chart, actually. It's got a low volatility compared to what you might expect. 16.7% down in terms of share price over the last 12 months, which has seen 58.6% decline in the oil price in the meantime. That has led to a 62% drop in the profits this time round for BP, but they have outperformed expectations. Tom Bergin is European oil and gas correspondent over